I believe the last time you were here, it could have even been during the dark days of the fourth quarter of last year. Lots of volatility. What a difference 9 or 8 months makes, 7 months, depending on when you were exactly here, all-time highs. What do you think is next, and what do you make of these highs?
I mean, we were talking about this before the show. It's absolutely crazy. The market was up almost 20% before this recent 0.5% sell-off, and the market continues to just want to go higher. You know, there's more allegations that Trump's going to be impeached, no China trade deal, but it doesn't matter. Supply-demand curve, market keeps going higher and higher and higher. I think it's going to go higher throughout the end of the year. I think any pullback will get bought, and I think we close on the highs. I'm not the biggest bull in the world, like long term, but if you just watch, and I trade every single day, we don't sell off at all.
And so one of the reasons that you think that more recently, at least in the month of July, that we're not seeing stock selling off is the fact that there's no demand for bonds, so it's going right into stocks.
Yeah,
is that true?
If you look at like Germany, they're in negative interest rates. You look in the United States, you know, you're going to put your money at 2% over 10 years? No, because you're going to put your money in stocks. Stocks are outperforming. As the more the interest rates go lower, the more people are going to have to look for chasing, you know, dividends and yield. They're going to go into stocks, and stocks continue higher. We had CSX yesterday, the worst day it's had in a decade. Yeah, the Dow's down about 50 points today, but not really moving the market that much. I think it doesn't. I don't think earnings matters. I think as long as interest rates keep going lower and lower and lower, you've got to put your money somewhere. If you're a manager, you're going to put your money into stocks, not in bonds.
Yeah, we have a pretty interesting chart actually showing, not in the terminal, but just overall a chart showing that stocks at the highs and yields lower, and that's really been helping. So it sounds like, who knows, maybe we see something similar toward the end of the year. Speaking of the end of the year, you are bullish, as you've been saying, into the end of the year. So your trading idea is a way to play that.
Yeah, it's the end of the year. It's December 31st expiration. I was looking at the SPY. SPY is right around 299 right now. The implied movement in the option market between now and the end of the year is about 20 points, so 200 points in the S&P 500 futures. So I just looked at buying a bull call spread, the 315, 320 call spread. You can buy for about $1.25 debit. If we close on the highs at 320 in the SPY, which is the measured move target, this will go to $5, so you could quadruple your money. Like I said, I'm not going to sit here and say I'm the biggest bull in the world, but reward to risk setup, 3 to 1 on your money, and I also think we're going to close on the high of the year.